Hello viewers, welcome back to this episode of Insurance for You and Me. As I had explained in the first episode, the main purpose of this series is to be a helping guide for consumers of general insurance. Hence, I would request your help in subscribing and sharing these videos to as many consumers as possible. Thank you. So far in this series, we have seen what is insurance, how it helps to overcome financial difficulties in case of insured event, how the insurance mechanism helps us to support our fellow citizens in case they meet with any insured events, and what are different classes of insurance products along with examples for the same. We have also learned the meaning of terms like risk, subject matter, and insured peril. In this episode, we will discuss about few fundamental principles which must be kept in mind while proposing for insurance. Many times we hear customers grieving about their legitimate claims getting repudiated or getting less claim amount than what is due to them. Such instances make the customer lose faith in the insurance process itself. While some of these grievances are caused due to inappropriate handling of the claims by the officials concerned and get resolved through legal methods, many times the reason for such claim repudiations can be attributed to the mistakes by the customers at the time of proposing for insurance. Are there any precautions that can be taken by the customers to avoid such situations? There are few key questions which the proposers should ask themselves while proposing for insurance. Am I eligible to take this insurance for the given subject matter? What and why are the obligations on me for information disclosure? How much should be the insurance amount? What is the amount I am eligible to be compensated in case of any insured peril damages the subject matter? These questions are all linked to three fundamental principles of insurance, which are technically referred as existence of insurable interest, adherence to utmost good faith, and understanding the principle of indemnity. To elaborate on the first question, eligibility to take insurance flows from the existence of legal relationship between the proposer and the subject matter of insurance. Because of this legal relationship, the proposer should stand to benefit by the safety or stand to lose by the damage to the subject matter. For example, if property owned by the proposer is damaged in fire, the proposer stands to lose. Hence, the proposer is eligible to insure the property owned by him. Such eligibility comes from different relations like ownership, partial interest by financier due to mortgage, interest due to possession of the property as bailey, etc. In case of personal insurances, such interest arises based on the dependency. Proposer will have insurable interest in the spouse and other family members, as the proposer is deemed to suffer financial loss if spouse or any family member suffers insured contingency. Besides the insurable interest as described herein, there would also be certain eligibility criteria like age, etc., applicable for specific insurance products, which needs to be taken cognizance of. If it is observed that at the time of a loss under the insurance policy, no legal relationship as detailed before exists between the proposer and the subject matter, such claims are not tenable and lead to rejection. Hence, this aspect is to be taken care at the proposal stage and ensure that only the eligible proposer takes insurance. Coming to the question on information disclosure, in insurance, the subject matter is owned by or related to the proposer. Therefore, the entire information on the subject matter is expected to be available with the proposer. However, the evaluation of the subject matter for the purpose of processing the proposal is done by the insurer. The information required by the insurer to evaluate the subject matter has to come from the proposer only. The decision to issue the insurance cover or not is based on the information furnished by the proposer. Hence, the proposer should provide complete and correct information to insurer about the subject matter. One of the fundamental principles of insurance, known as principle of utmost good faith, reiterates this requirement. The proposer must go through various questions in the proposal form carefully and provide complete answers to all of them. Not providing information that is non-disclosure or providing wrong information that is misdescription would lead to wrong decision by the insurer while processing the proposal form and hence has serious implications. What are those implications? In case it is found during the policy period that there has been any non-disclosure or misdescription while filing the proposal form, the insurer has right to make the policy void. That means no claim is payable under that policy and the policy can be cancelled once the non-disclosure comes to light. This is irrespective of the fact whether the non-disclosure is related to the claim or not. There are many instances, particularly in respect of personal insurances like health insurance or personal accident policies, where non-disclosure has led to policy cancellation and claim repudiation, creating hardships to the customers because of not following the principle of utmost good faith and not giving correct declaration in the proposal. Taking care to ensure proper disclosure in the proposal form can help to bring down the claim rejections related to this aspect. On the last question of how much is the right amount for insurance, we should remember that insurance policies are based on the principle of indemnity. So the insurance policy should make good the loss in such a way that the insured should neither be better off nor worse off as a result of the loss. The purpose of insurance is not to provide any profit to the insured from an insured event, but only to help recover loss. So the policy conditions ensure that the claim amount is worked out in such a way that the claim paid equals the exact loss amount. In arriving at the loss amount, the market value of the insured asset after making necessary allowances for depreciation is only considered. So the sum insured under the policy should be equal to the market value of the entire insured property and should be chosen carefully. In case the proposer takes insurance for a sum insured higher than the actual value of the property, the insured would not be allowed any higher claim amount than the actual loss. So over insurance by the proposer does not provide any extra benefit and hence to be avoided. In case the insurance is taken for a sum insured lower than the actual value of property, the insured would be paid the actual loss amount subject to a maximum of sum insured opted. So insured would get less than the actual loss, defeating the purpose of taking insurance. We do have few exceptions to the above indemnity principle under certain products, which would be discussed when we deal with those products in future episodes. In respect of personal insurances like personal accident or health policies, it is difficult to determine the value of subject matter. In these cases, the sum insured is decided based on individual assessment of the required benefit in case of a loss and the affordability of premium. So far, in this third episode of Insurance for You and Me series, we have discussed on certain fundamental principles to be followed while proposing for insurance. We will meet again in the next episode with another topic. Until then, bye from Bhaskar.